Hi, how's it going, friends? Today is the 23rd of November 2023 and we are reaching a peak in the stock market. Now, what do I mean by this? If we zoom out a little bit and see what's been happening within the stock market this year, we can see that from March of 2023, we had a low around 3,800, and since then, the stock market has been continuously increasing for the 4 months after that until we reached a peak in the US S&P 500 till 4,600. Now, since reaching the 4,600 peak, the S&P 500 has been in a steady decline over the next 3 months until it reached around the 4,100 area. Now, that is the same as around a 10% decline in the S&P 500, which means it's in a correction territory. A correction basically means that the stock market is 10% down from its previous high point, which is back all the way in July. Now, anytime there is a 10% correction, people will start to pay more attention to the stock market itself. Now, this is especially an important time to pay attention to what the media is saying about the stock market. So this is an article from the 30th of October of 2023 saying that US stock market correction and what is coming up next. Now, usually, but not always, if the media is all doom and gloom about the stock market, usually there is a reversal in the market coming shortly. Now, this is because the media tends to lag behind the market itself. All the important information about the company, such as its earnings and all the reports, actually reaches the market first and gets priced in before it reaches the media. So by the time where all these information gets sent to the media, or when the media picks up all these information, it's usually already priced into the market and it's too late already. So basically, whatever the media says, pretty much just try to do the exact opposite. So in short, if the media says that everything is good, things are probably going to be bad. Now, on the other hand, if the media says that everything is bad and it's all doom and gloom, there's probably a good signs coming. So what actually happened to the stock market after it had its 10% correction back in end of October? The market completely rallied after that period of time and had its best 3 weeks of performance within the last year or so. Now, this is a 10% increase from the lows that we had back in October, and it pretty much completely wiped out all of the declines of the last 3 months. The next thing that is going to happen is that we're going to hit this resistance territory of around 4,600 in terms of this S&P 500 again. Now, if we go and take a look at the Fear and Greed Index for the US market, we can see currently the Greed Index, which is ranked from 0 to 100, is at the greed part with a number of 66. Previously, just yesterday, it was at 63. A week ago, it was at 56. And merely a month ago, around the end of October, the market had Extreme Fear, which had a value of 22. So what tends to happen is that when there is extreme fear, there's usually a high probability of a rebound in the market. And when there is extreme greed, there's usually a sell-off in the market. So in this current situation, we have not actually reached the extreme greed territory. Currently, we're just at the greed territory. So with all this being said, how do you take advantage of this particular situation? Now, when you're investing, I personally adopt a long-term investing strategy. Now, it is important to go for a diversified index fund or good solid companies when you are adopting this long-term investing strategy. So looking at what is likely to happen to the market itself, it is entirely possible that the market will reach a resistance when they hit around the 4,600 territory and have a brief retraction before going past the 4,600 resistance. Now, if it does manage to break through the 4600, there'd be the further upside that's probably expected. Now, if it does bounce back or does not break past the 4600 resistant territory, there may be more downside to come. So the 4600 is a pretty important resistant level, and this is the level that we hit back in July that we weren't able to break past. Now, if we look at further back in the past, the whole year of 2023, for the whole market of 2023, if we start measuring from the beginning of January to around now, the market has been up by around 20% for the entirety of 2023. Now, this is a pretty good return for the market over the 1 year period. So, for example, if you put in $1,000 into the S&P 500 on the first trading day of January of 2023, you would end up with $1,200. Now, if you put in $10,000 from the beginning of 2023, you'll end up with $12,000. So it's a pretty good year as far as the stock market is concerned. Now, if you are interested in investing in the US market, you can sign up with this video sponsor Tiger Brokers, where you can enjoy 4 free trades each month and no currency exchange fees for the first $2,000, and also claim a $30 cash bonus when you make your deposit. As a special bonus, if you deposit 2,000 New Zealand dollars within the first 7 days, you'll get an extra 50 New Zealand dollars cash bonus. So you can earn up to $80 of total cash bonus if you sign up and deposit at least $2,000 within the first 7 days. Tiger Brokers has an extremely easy to use mobile app and a very comprehensive charts and options that you can use. And their fees compete very well with other brokers on offer here in New Zealand, so be sure to check them out if you can. There's a sign up link to all the promotions in the description below. Now, if you are talking about long-term investments, anytime that there is a 10% correction in, for example, the S&P 500, and you manage to invest around its 10% correction mark, you are effectively banking in 10% return because the market will always recover in the long term.